So just over 7 years ago, we received the 2017 Tax Cuts and Jobs Act. And I remember in 2017, I was like, holy smokes, how is it 2017? Now that it's 2025, I feel the same, but just like, that was a long time ago, right? So that act did a handful of things for us that lowered taxes for millions and millions of Americans, okay? Tax brackets went down, reduced the overall effective tax rate for lots of people. We ended up with the qualified business income deduction under Section 199A, which for a lot of small business owners allowed them to pay only tax on only 80% of the profits out of the business. We had caps on how much what's called SALT deductions, state and local income tax deductions. For people like me in Texas, okay, whatever. But for people who have a lot of property tax, for people in high income tax states like New York, California, and New Jersey, this was really, really painful. It capped it at $10,000. And we ended up with a number of increased deductions. So we saw an increase for child tax credits. We saw an increase for standard deductions for households. And the net impact of all of this was a lot of people paid a lot less in taxes for the last 7 years, okay? Well, if Congress does nothing, most of the provisions of the Tax Cuts and Jobs Act are going to sunset and go away as of the stroke of midnight. It's going to be like Cinderella. We're going to turn into a pumpkin, and on January 1st, 2026, we're going to be back to the old set of rules for most of these provisions, okay? The big question mark is what's going to happen. You want to stay tuned, keep updated with just what's Congress doing and what does law look like as we go through the year. Make sure you click follow and keep posted to our channel. We're going to keep you posted.